What if I told you that the silver market just shattered overnight? While you were sleeping, something massive happened. Silver just hit $100 per ounce in the East. But here's the twist. The financial media, they're calling it a glitch, a temporary blip. They want you to scroll past it like nothing's wrong. But here's the truth they won't say out loud. This isn't just a price move. This is a fundamental break in the market. And if you're not paying attention, you could miss the biggest shift in years. Stick around, because I'm about to show you why this could change everything. So what exactly happened while you were asleep? It wasn't a regular rally or a market correction. It was a break. The silver market, traditionally divided between East and West, just decoupled in a way no one saw coming. In the West, prices barely budged. But in Shanghai, silver surged to $100 an ounce, an almost 15% premium. That's not just a fluctuation, it's a crack in the foundation. Why does this matter to you? Because these gaps don't stay open long. The smart money is already moving, and soon it won't be an option for regular investors like you. Could this be the start of a silver reset? Or are we witnessing a temporary anomaly? I'm about to break down exactly what this means for you in the market. Here's the claim. This isn't just a price movement, it's a structural reset. The arbitrage gap, the difference in silver prices between East and West, just hit $13.89. And that's not some small anomaly, that's a massive hole in the market. In the West, you can buy silver for under $90 an ounce, but in Shanghai, they're paying over $103. That's a $13 gap that's draining physical silver out of Western vaults faster than anyone predicted. You think that's a coincidence? Think again. This isn't just a price issue. It's a market integrity issue. And here's what's really scary. As long as that gap stays open, the physical metal is leaving New York and London. Paper contracts can't stop it. They can issue contracts all day long, but they can't print bars of silver. So what happens when this all breaks wide open? Stay tuned. Now let's talk escalation. This situation isn't just intensifying, it's spiraling. The $13 gap between East and West is like a wound in the financial system, and it's bleeding out faster than anyone can patch it up. What's happening now isn't just a flash in the pan. This is the kind of breakdown we've seen before. Remember 2008, when markets hit a wall and everything started to unravel? This feels eerily similar. The difference now, we're witnessing a market decoupling that shouldn't be happening, the kind of decoupling that puts the entire system at risk. And here's the kicker. This isn't just an anomaly anymore. This is the new normal if nothing changes. But what happens when the gap grows even wider? What happens when silver and gold really start moving at these extreme rates? That's where we're headed next. Here's where it gets even more disturbing. Silver just outperformed gold by nearly 4 times overnight. Let me repeat that. Silver, a traditionally slower moving metal, just crushed gold's performance. Gold has been in a steady, disciplined rise, moving up by 0.6%. But silver, it shot up by 2.34%. That's not normal. When silver starts moving 4 times faster than gold, the entire precious metals market enters a parabolic phase. This is when the price action turns explosive and when regular investors wake up too late to take advantage. But here's the real question. Why is this happening? What's driving this kind of price action? The truth is, silver is becoming the lead dog, and it's pulling gold along with it. And if the price difference keeps accelerating, you're going to see a chain reaction that could send silver to levels we're not even talking about yet. Stick with me. This is where it flips. Now hold on. Things are happening fast. In the past few hours, we've seen a rapid stack of developments that you can't afford to ignore. First, there's the growing physical drain from the Western vaults. Second, the $13 arbitrage gap that's forcing silver out of New York and London. And third, the growing realization that this could be just the beginning of something much bigger. What happens if this continues? If that gap keeps widening and the physical supply keeps draining east, you're looking at a systemic collapse. It's like a dam about to burst. Every minute that passes without a correction makes the break bigger. And once that dam breaks, the floodgates open. The smart money has already seen this coming. The question is, will the retail investors catch up in time, or will they be left holding the bag? Now let's zoom in on the real-world impact. This isn't just a game for traders. This is about real people, you. If you're holding silver or considering jumping in, the way this plays out in the real world matters. The truth is, the average person has no idea how fragile this system is right now. You might think you're just holding a bit of silver as a store of value, but the truth is, you're holding on to something priceless, something the financial system desperately needs. When physical silver starts draining out of Western vaults like it is now, the prices aren't just numbers on a screen, they're signaling that the supply chain is breaking. And if you're watching the premiums spike at local coin dealers, or you see silver disappearing from allocated storage programs, you're feeling this in real time. If this feels familiar, say so in the comments. What are you seeing in your local market? Because if this continues, the price isn't going to stop at $100. It's just the beginning. But let's take a step back and look at the bigger picture. This isn't just about panic buying or temporary supply issues. This is about the mechanism that allows this to happen. It's all about incentives and leverage. Why are the East and West so out of sync? Simple. The West has built a system based on paper contracts, futures, options, all those promises. But when physical silver starts disappearing from vaults, those paper contracts can't deliver. They can't create metal out of thin air. The gap? That's leverage working against the system. And here's the unsettling part. The whole setup has been designed to keep prices low, to keep the market calm. But when the system's integrity starts cracking, those in power, they aren't going to let it all collapse without a fight. They'll try to hide the cracks, manipulate the narrative, but no matter how hard they try, the fundamental problem remains. The physical flow is already moving east. And when that happens, systems break, no matter how many media blackout attempts or margin hikes they throw at it. So what's next? There are two possible paths here, and both are full of uncertainty. First, let's talk about the bullish scenario. If the West starts acknowledging the Shanghai premium, if prices begin to catch up, we could see silver push past 130, 150, maybe even higher. At that point, it's going to be chaos, with institutional investors and retail traders flooding the market. But here's the risk. Once the price crosses those thresholds, the market could hit a point of no return. The parabolic phase will be over, and when it collapses, it'll be brutal, just like the 1980 silver squeeze or the 2011 spike. On the other hand, the pessimistic view could still play out. If the gap closes too slowly, or if the West manipulates the market long enough, you could see the whole reset stall. And that would leave investors stuck, waiting for a market that's never going to recover. The momentum is already there, but which direction will it push? The next few days will tell us a lot. Here's the key insight. Whether you're holding silver now, planning to buy, or still on the sidelines, this moment is pivotal. The gap between the East and West isn't just a price difference, it's a sign of deeper systemic issues. If you're not positioning yourself for the $130 silver reality, you're betting against the flow of history. You can see the data for yourself, the Shanghai premium, the gold to silver ratio, the inventory drain. It's all there. And it's all real. But here's the catch. Nobody knows exactly where this will go next. Markets are chaotic and anything can happen. The question is, will you get ahead of this wave or wait until it's too late? Don't let the mainstream media lull you into complacency. Follow the data, trust the signals, and make your move before the window closes. Watch gold closely, keep an eye on the $91 level, and stay sharp. If you're serious about this, subscribe and hit the bell so you don't miss the updates that'll keep you in the game. Because if you wait for CNBC to catch up, you'll be paying $120 silver while the rest of us are already looking ahead to $150.